Keep calm and carry on buying AI tech stocks as they deviate from the highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks. It's stock stealth bear market, big tech Q1's earnings week when we could see blood on the streets of Silicon Valley. As Google, Microsoft, Apple, Amazon, Qualcomm and Intel and more all report their Q1 earnings. Potential blood on the street buying opportunities that I and my patrons have been patiently waiting for these buying levels to be triggered, as these charts from early February illustrate where the dominoes could finally start falling as we see a continuation of Friday's plunge on break of key support levels for the likes of Nvidia plunging straight through 206 and Google below 2400. Seeing big buying levels finally start to get triggered in the latest phase of this stealth stocks bear market that is cycling through target stocks like a Tasmanian devil, where my focus was on Google as it finally broke below 2400, that I'd long flagged to patrons or where I would be buying big, and in advance of which I warned patrons for several weeks not to jump the gun regardless of what the general indices were doing. Stock market big picture. My big picture remains as I've been iterating for the past 3 months, in that I expect the Dow to target a volatile trend to below 31k. As things stand, an interim corrective rally into mid-May has been delayed for at least a few days, as the March lows look set to be breached during the coming week, especially if Apple and Microsoft nuts also finally crack. Unless they post near perfect earning results, and the same is true for Google or Alphabet, as you might know it. The Dow is currently targeting a trend to 32,000, and looking further out, I see the final low during late summer as probably between 31 to 29k during August, before the Dow resolves in a trend towards new all-time highs during Q4 that I'm sure will have everyone confused. How can the stock market be going up to a new all-time high when we're going into a recession? They'll be scratching their heads. Expectations which are subject to my forthcoming in-depth analysis, because all of my current stock market analysis date back to September analysis and early December, which is still valid today as it mapped out the trend trajectory into May 2022. Quantum AI stocks bloodbath potential opportunities. The once overloved and overhyped tech sector is now hated, which is what one wants when accumulating stocks trading at deep discounts to their highs. Though, once more note that all stocks trading above a PE of 20 have a high probability of trading below 20 times earnings, given the valuation reset I warned to prepare for over 9 months ago. Oh, my throat. Not COVID. To understand this, everything that happens this year is just a mere inconsequential quantum fluctuation in the quantum AI megatrend, as the quantum waves continue to vibrate towards quantum supremacy. I often get asked, when will the sleeping giants such as Intel come alive, and how could the stock prices soar? To which my typical response is that it's a sleeping giant, and well, it's going to likely 4x to $200. But the fact is that if I'm getting asked such questions, it illustrates that many do not really understand what they are investing in, for if they did, they would not be asking such questions. And in fact, the fact that one does ensures that when the stock prices do so, some will likely bail out at, say, after a 50% advance, maybe let it run to 100% and then be forever asking me When will the Intel stock price drop again so they can buy back in what they sold earlier? You don't get it if that's what you think. Remember, we are not investing in normal stocks. These are not Netflix, Zoom and Poom and the kin, all the Kathy garbage trash. These are quantum AI tech stocks that are riding an exponential trend. Buying levels. Remember folks, buying levels are not price targets or forecasts. Buying levels are so as to enable one to accumulate a position at deep discounts to the stock's highs. For instance, my buying level of Google at $26.25 has been enforced since it was trading at over $3,000, which prevented me from buying any significant exposure to Google above $26.25, which during the bear market was revised down to $24.52. As I iterated in my recent articles, I saw sub 2400 for any big buys. So understand that the whole point of buying levels is they should eventually be achieved, else what's the point of having buying levels that never get triggered? As for how buying levels are derived, well, the starting point are chart support levels and valuation scenarios that are further refined using spooky maths, such as the fine structure constant, which is beyond the scope of this video to go into. So looking at the current AMD chart support is at $81. Spooky maths turns this into 82.2, where I have a limit order to buy additional exposure to AMD because I'm already nearly 70% invested. Whilst the buying level becomes $84 for a slightly higher probability of being achieved or triggered. And do see my earlier articles for explanation of stuff such as the earnings growth factor EGF and the expensive cheap ratio EC ratio in the links in the description. And remember folks, one cannot invest with the benefit of hindsight, so it's no good looking at the chart and thinking as if by magic one could have a TARDIS on time travel and bought at the precise lows. Instead of at XYZ buying levels, thus buying levels at least prevent one from stupidly FOMOing into the stocks near their highs, or prevent one from firing all of their investing ammo early during the bear market. Instead, buying levels satisfy the urge to buy new lows by nibbling whilst waiting for the big buys. Thus, this way, whatever transpires, one has at least increased one's exposure to the AI megatrend, which is the primary name of the game. Not picking tops and bottoms, but increasing exposure to a megatrend that most remain largely clueless to the extent that which is it already changing all of our lives for better or worse. So in the long run, it does not really matter if, for instance, one bought Google at say near 2600, or rather wait till it falls to 2300. As long as you've got exposure. If you don't have exposure, then the train will wave at you. I'll wave at you from the train as it goes through the station. Yeah, the AI megatrend gravy train. See you later, guys. Just that it makes one feel like they've, all this. So all this extra effort with the buying level is just to make one feel like they've put some extra effort into squeezing that few extra percent, maybe extra 15% out of the market, so you feel like you've done a good job. And this article is an excerpt from my latest timely just posted article in the countdown to big tech stocks earnings reports this week, and that's for Google, Microsoft, Apple. I've already said which ones. That breaks down how low they could go, it's not certain, and where I'll be accumulating additional exposure at deep discount, because I've already bought a big chunk of Google on Friday at $23.82. And this was first made available to patrons who support my work. So for immediate first access to all of my analysis and forecast, then do consider becoming a patron by supporting my work for just $4 per month. That's nothing for what you're getting access to. Seriously, become a patron for 1 month and you see. Whilst my latest full spectrum in-depth analysis that took me a good 3 months. 3 months of hard work, stop and go, but 3 months, is on the UK housing market that maps a trend forecast out for 3 full years into the future. Can the UK continue trending higher, or will interest rate hikes halt the housing bull run? All and more is revealed in my extensive UK housing market analysis and concluding detailed 3-year trend forecast. That will soon be followed by my updated US housing market trend forecast after my existing 2-year forecast recently concluded, that once more aims to project a trend for US house prices at least 2 years into the future. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month to gain access to all of my recent analysis on accumulating AI tech stocks at defined buying levels as and when opportunities arise. There's none of this waiting for the indices to drop, because there's a stealth bear market in progress that cycles through individual stocks like a Tasmanian devil. You saw last week. Did you see what happened to AMD, TSMC? And Qualcomm. That's the Tasmanian devil. Indices, not much changed, but you got new lows in Qualcomm, TSMC and AMD. So to gain access to all of my recent analysis on accumulating AI stocks during the bear market of 2022 that I forecast to expect as of September 2021, and then confirmed in my analysis of 5th of December following the CI18 trigger. That's a crash trigger that has a very low frequency. It occurred in February 2020 and it occurred again in December 2021. Warns of significantly lower prices ahead, which has come to pass, which is presenting myself and patrons with huge opportunities to accumulate target AI tech stocks at deep deviations from the highs. You know the motto. The greater the deviation from the high in good stocks, then the greater the buying opportunity being presented. Whilst here is my schedule of both in-depth analysis and market briefs, though they're not really brief, because I have a tendency to do mega pieces. So my briefs are other people's essays. So again, consider becoming a patron by supporting my work for just $4 per month to capitalize on the stock's bear market and what I strongly expect will soon follow it, as we ride the inflation megatrend courtesy of central bank and government money printing on an epic scale. I've been warning of high inflation is coming since March 2020. You don't believe me? Go check my video. Every video ends with a warning that big inflation is coming. You should prepare for it. Well, big inflation has arrived, and it will last the whole of this decade, no matter what they say. Big inflation will be with us for the remainder of this decade. Yes, there'll be dips down to maybe 4%, but you're not going to see 2%. Not unless they change the CPI measure. Edit everything out that goes up and just leaving the little bits that fall because of deflationary forces. The fiddle. You do realize CPI is fake. The real inflation rate is double CPI. What, 8%? Real is 16%. Go back and measure. Use the measure that they were using in the 1970s and early 80s. Use the same methodology, and US inflation is 16% now. UK inflation is at least 15%. That is CPI. So subscribe to this YouTube channel for new videos, and do consider becoming a patron by supporting my work. Just $4 per month as we ride the quantum AI megatrend into the future.